Let's talk about the Rapid Rescore and how do you do it properly. Let's talk about them. So here's a definition I want you to really pay attention to. So when we talk about Rapid Rescore, we're talking about a very specific sort of scenario. So let's say you're about to make a life-changing purchase, maybe buying a home or a car. If you're feeling overwhelmed about the process, don't worry, right? And home buying or car buying can be confusing, especially when it comes to your credit. So it's a whole thing is that when we talk about Rapid Rescore, it's basically this is a credit bureau update. Sometimes that they call it CBU. So this is actually a tool that the lenders may use when it comes to providing you with specific mortgage rates or car loan rates. And now the thing is that not all lenders offer this service, so you'll need to check with your specific lender to make sure that they actually offer this alternative. So now when we talk about Rapid Risk Score, what is it? Having a great credit score, as you know, will can help you lend low APRs for mortgages, car loans, and what have you. A good score indicates that your potential lender that can trust you, right? Because it shows that you are responsible with your money and you will make your payments on time. With a lower credit score, you could face a higher interest rate or even be declined for a mortgage or a car loan for that matter. And the thing is that by making small changes to improve your credit score, you can save money on your mortgage. This is actually where a rapid risk score could be helpful for you. Okay, it's really important to understand that when we talk about rapid risk score, the rapid risk score is just an opportunity for you to actually go, let's say, from a 600 FICO score to 650 or a 700, and through a certain specific scenario. But now the thing is that to actually clinch that benefit, you gotta be in a specific situation, right? We're talking about you have to lower your car payments, your monthly payments. In other words, your credit utilization ratio has to be really good. And when it comes to CUR, as you know, the lower the better, right? So your credit utilization ratio is really important because that's an element that the lender looks at, but also that's an element that goes into your credit score. So if the lower your credit utilization ratio, the higher the possibility that your rapid risk score could be in your favor. So this is another a great way to look at things prospectively. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Let me talk to you about the practicality of a rapid risk score. How does it work? And what are the conditions you need to really fulfill before you can actually qualify? So let's say you have a credit score of 680, right? 680 is not a bad credit score, but it's not a good credit score either. Let's say it's a fair score. But if your score was higher, even just by a few points, you might be eligible for a lower mortgage rate or car loan rate that you would otherwise, right? So you go from 680 to, let's say, 720 or 730. So you take a look at your credit card balances. Perhaps you use a service such as Credit Journey, and you have learned that your credit utilization ratio is an important factor when determining your score. That's what I just told you a little earlier, right? So when we talk about the CUR, what is CUR? Because I think I said it to you 2 or 3 minutes ago, but I didn't define it. So a CUR is basically the proportion of your credit card balances to your credit limits. And so you realize, for instance, that if you pay off your credit card balances, this ratio will decrease and your score could actually improve. And again, I said that there is an inverse correlation between your CUR and your let's say your ability to clinch a higher loan or a higher amount for a line of credit or credit card limits. Okay, so in other words, the lower your CUR, the better it is for your FICO score, but also for your credit limits and loan amounts. Now, the thing is that if you are able to lower your CUR, this is great news because this is one way you can quickly improve your score to potentially get a better mortgage rate or car loan rate or have you. Okay, and so you go ahead and pay off the balances on your credit cards, only to find out that the three main credit bureaus, Experian, TransUnion, and Equifax, offer they sometimes they will do the rapid risk score, but sometimes they do not update your credit score and your credit score for about, like, they have to wait for 30 to 45 days, and you don't have time, right? Because you're trying to get the loan ASAP. So when it comes to buying your dream home or your dream car, time is actually of the essence, and you know you can't wait this long. That's when the Rapid Risk Score can be helpful. A Rapid Risk Score is a tool your lender could offer as a way for you to receive an updated version of your credit score more quickly. So this is really wonderful. Boss, I want to quickly remind you of today's topic. We are having a conversation about Rapid Risk Score, credit score. How does it work and how to do it properly? Now, let me talk to you about the steps you need to really think about when we talk about Rapid Risk Score. Now, there are three simple steps you need to follow right now to actually clinch a Rapid Risk Score. So basically, now remember though, not all lenders offer this. So you want to confirm that this is the tool you can use should you request for an updated score. Let's say you reach out to Chase, for instance, or you request, I mean, you reach out to Navy Fed, and you want to know if there is a possibility to do a Rapid Risk Score. This is a question you got to ask a rep, and you want to have a clear answer. And it's like a clear answer means if the rep is not really sure, you want to call again and again until you get a clear answer. Okay. So the first thing you want to do here is that the first step when it comes to Rapid Risk Score, is very simple. It really talks about really targeting the credit utilization ratio. After you've made recent changes such as paying off credit card balances and requested a Rapid Risk Score from your lender, the lender will request for a new credit report from the credit bureaus or credit bureau. So this is really good. Now, according to Experian and Equifax, in some cases, this process initiates a hard inquiry, which could hurt your credit score, but only by a few points. Okay, so you are actually giving the green light to your lender to contact the credit bureaus to actually check your credit account at the credit bureaus. So that's the first step. The second step is your lender will receive an updated credit report showing the new score. Keep in mind that depending on the credit bureau, this could update either your Vantage score or FICO score. And then the third step is once the new credit score is reflected in your report, your lender can actually update your contract and provide you with new rates and increase your score into a new range, such as from fair to very good, could result in saving thousands of dollars over time. So it's one of those things where, I mean, from 680 to 720, there's a whole gulf, there's a whole delta that really will go in your favor should you actually, I mean, if you're able to make the leap. That's really where you are going to see all the benefits in terms of your APR, but also in terms of how you are categorized as a borrower. Like you wouldn't be actually like a prime borrower anymore. You will be, or a subprime for that matter. You'll be like a really good borrower. So when we talk about Rapid Risk Score, how long does it take? Now, unlike traditional updates to your score, I mean, when we talk about your FICO score or your Vantage score, those traditional updates they take somewhere from 1 to 2 months, in some cases 3 months, depending upon the credit bureau. So TransUnion tends to be really fast, but I mean it also depends on the timing. So in the holiday season, you really have a pretty slow process, but in the empty, what we call the empty months of the year, January, February, March, you have a Rapid Risk Score. So that's really cool. And so once you actually get your updated score, it may actually take an additional few days to work out the new percentages and contracts with your mortgage lender or your car loan lender or what have you. Now, when should you request a Rapid Risk Score? Because timing is really of the essence. You're not going to waste your chances of a Rapid Risk Score, all the time. So you may want to request a Rapid Risk Score if your current score is not entirely reflecting your financial activity. For example, you made a recent payment towards your credit card bill without having maxed out or used another card. You could really improve your score. However, this activity will not get reflected for another 30 to 60 days, time you don't have to waste. So a Rapid Risk Score will capture this positive activity and calculate it towards your new credit score in just a few days. And you can also request a Rapid Risk Score because you are actually serious. You're really serious about the home you're buying. So if you are if you're a strong candidate for a mortgage but looking to save some extra money over time, a rapid risk score can help you achieve actually your home lending goals. So rapid risk scores, when you think about them, those can are I mean those are great scenarios that can be used when you are applying for a top level credit card and want to ensure that you will be approved. So since you cannot do this on your own, you will need to request this service from your lender. That's why I wanted to insist on the fact that not all lenders actually approve this. So sometimes just a few extra points added to your credit score is all it takes to improve your standing. Boss, I want to quickly remind you of today's topic. We are having a conversation about rapid rescore credit score. Now, what happens if your credit score remains low? Because there is a possibility that you tried everything, you tried a rapid risk score, but it doesn't work, right? So, what do you do now? Sometimes, even with improvements, your credit score may still remain too low to get the kind of rates you are hoping for. So, the lower score could be due to other factors such as derogatory remarks in your credit report. You can learn more about these remarks and how you can manage them. Okay. And so it's one of those things where you have to see what works for your situation. And so, while a low credit score can pose a challenge, there are some ways to lend a better rate, even if your score hasn't changed much or at all. So this include a bigger down payment. So if you are going to if you're going for a car payment or for a mortgage, you want to have a bigger down payment. The more you pay upfront, the less you will owe and have more in equity in your home. And buying mortgage discount points, you may be able to purchase part of the interest on your loan upfront, which can lower your monthly payments. This is a good option if you plan to be in this house for a long time, so you can commit to making more payments over time. So this is really cool, and you can change your existing mortgage rates, and you may end up actually having buying. You may end up having to buy a home with a less than ideal rate, but down the line you may have options like refinancing your loan. So this is really cool. Now, one thing I need to say here is that you want to continue to monitor your credit score, because this is where everything starts. Once you have actually signed up, if you for with the credit monitoring service, or you have also signed up for your mortgage and have your new home or your new car, don't forget that your credit score can be impacted. So you want to monitor with your bank. Your bank portal and identify monitoring services you can use, so you can continue to actually keep your credit score safe, because the last thing you want is to actually have your credit score stolen and things actually being present again on your credit account. So this is really a bummer, and this will help you this is not going to help you actually make progress real fast, and you need to make progress real fast. Here's the overview I want you to really think about. When we talk about rapid rescore, you need to really understand that changes in your credit history may take time to be reflected in your credit scores. So a rapid rescore aims to really accelerate the updating process, usually in the hopes that some newly considered information will increase your credit scores. But you want to contact the lender to make sure that he or she, I mean the organization will do it for you. You cannot initiate a rapid risk score on your own. Instead, you will need to rely on a creditor that provides those services, such as a credit card company or another type of lender. Okay, this can be a credit union, this can be a bank, this can be all kinds of organization. So when changes happen in your credit history, such as disputing an error on your credit reports or paying off a large debt, it usually takes time to see those changes reflected, especially if the amount that we are speaking about is consequential. So a rapid risk score, no matter the amount that you owe or the amount of derogatory items, can really help you accelerate things real fast. And it doesn't matter the chronology. If you initiate it 2 to 3 days, and the rapid risk score will actually take shape. And the thing here is that when we talk about the update process actually is different from one credit bureau to another. So a rapid risk score that you get from Experian is not the same that you get from TransUnion or Equifax for that matter. And based on our analysis, Experian is the fastest when it comes to a rapid risk score. They have the whole process is automated, and so when the lender contacts Experian for a rapid risk score request, they can actually take care of the request a lot faster. So that's really good. And what you want to do is you want to actually initiate a rapid risk score after a major event. So we are speaking about a significant pay down of a credit card balance, or a significant pay down of a loan. Let's say you had a loan for all those years, and you just made the last payment on that loan, on that car loan, or on that student loan. You can request right away a rapid risk score, so that can really help you, especially if you are going for the big enchilada. And the big enchilada, when it comes to personal credit, that's a home mortgage, right? A home mortgage, we're speaking about hundreds of thousands of dollars. So a very small change when it comes to the APR actually carries an important effect, not only in the short run, but also in the long run. One thing actually you have to actually remember when it comes to a rapid risk score is to really understand that you can have it for yourself and your spouse. If you are co-applying, you can actually have a rapid risk score for both. Okay, if you're co-applying for a mortgage, for instance, you can actually ask the lender to actually seek a rapid risk score for both you and your spouse. That way, you can increase your chances of having a lower APR. You can go from a potential APR of 10% to a potential APR of 7% or 6%. It's all about the process. And so some lenders will also run special reports on a borrower's credit reports and scores that help them diagnose which actions may result in a credit score increase. For example, a lender may highlight which debts you should target for repayment in order to increase your credit scores and secure more favorable loan terms. And so that's really good. When the lender is actually in your corner, that's really good. Now, keep in mind, though, that these reports will be estimates only. It's not possible to predict credit score changes with 100% accuracy, because different lenders use different scoring formulas to calculate your credit scores. So what I'm trying to say here is that, in addition to the credit score you get from TransUnion, Equifax, and Experian, and when you have a lender such as Chase or Citibank or Wells Fargo or Bank of America, they have their own algorithms internally to sort of calculate an updated credit score based on other factors. And for instance, if you are a Chase customer and you've been having overdraft over overdraft over overdraft, that will actually will impact your standing. Even if you have a high credit score, we have the possibility of having several overdrafts will really lower your ability to be trusted for loan payments or loan repayments. Okay, and now, how do you know if a rapid risk score is right for you? Well, it really depends on what you are, or what the kind of a scenario you want. But a rapid risk score can be beneficial if a slight boost in your credit scores will help you get better terms on a loan, secure a lower interest rate, or simply move into the minimum credit score range for approval. And I mean, there are some lenders have criteria. They have thresholds you need to reach in terms of credit score to actually seek approval or clinch approval. So if you are able to pay off debt, or let's say correct an error on your credit reports that might lead to an increase in your credit scores, rapid rescoring can save you time and potentially money in the long run. And that's what you want to target. So however, it's really important to understand that the rapid rescoring is generally only helpful if someone is actively evaluating your credit scores, such as when you apply for a loan, especially those significant loans such as a mortgage or car loans, or even a home equity line of credit. Now, a rapid risk score also cannot undo a credit history full of late payments, delinquent accounts, or other damaging behavior. The only way to see your credit scores improve from previous mistakes is to build up a positive credit history. This can take months or even years of good credit habits to achieve and maintain. Thank you so much for your attention. In today's conversation, I spoke to you about rapid risk score for credit, and I give you the definition, the steps, the overview. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.